me. All right, here we go. Hey, everybody, Real Estate Ninja here. I hope you're doing well. Got a story out of Goldman Sachs. We're talking about interest rates today. It's actually trending. Why? People need interest rates. Companies need interest rates. The economy needs interest rates lower. That is not going to happen. Even if it does, it's going to come in a really small microdose. It's going to pump a handful of people up, and then they're going to crash that system, raising rates again. This is trending today. We're going to talk about Goldman Sachs. I have two stories, okay? One out in the mainstream media and then one that's hidden, and it shows what Goldman Sachs is actually doing while they're deceiving you, all right? So here we go. Out of CBS News, Goldman Sachs expects the Fed to cut interest rates 5 times this year, starting in March. It says the Federal Reserve is likely to start lowering its benchmark interest rate in March and make a total of 5 cuts in 2024, economists at Goldman Sachs predicted on Monday. Again, I'm about to tell you what they're doing in secret, what they did all last year, deceiving people. Another thing, when we're talking about real estate, think about how many people are about to get sucked in because their broker is telling them, and I can't blame the broker necessarily because most brokers don't know, interest rate cycles, real estate cycles, all that stuff. All they care about is selling a loan because that's how they get paid. If you think about it, you're looking at a moment in time where they're going to be telling people, their clients, hey, if you want to get in the house right now, get in before the house keeps going up higher. And hey, you're going to be able to refinance lower a little bit later. All right. Now it says here, the investment bank expects the U.S. economy to come in for a soft landing with modestly slowing economic growth and for inflation to keep dropping this year. Goldman expects the central bank to gradually ease rates, which would steadily reduce borrowing costs for consumer and businesses. Remind you that anytime the Federal Reserve lowers rates, after some time of it going lower, people start to buy more. They use leverage to buy, and it causes the price to go up. Okay, so again, the Federal Reserve has never lowered rates, especially aggressively, in an aggressive rate lowering cycle, unless things are bad. Okay, but here everyone's saying it's going to be a soft landing. Everything's okay. We can think that home prices are going to keep going up. They're going to go ahead and lower rates. That is not the case. All right. Again, and I have to stress this. There are people out there that they can't listen. They're not good listeners. That's why they probably will never be truly successful when it comes to finances, because they just hear one little thing and that's all they believe. Fed's going to more than likely lower a little bit, and they're going to deceive you and say everything's okay. And then, oh crap, look at what happened with inflation. And it's probably going to take less than 1 90-day cycle, maybe two quarters, 6 months, 180 days to go, oh crap, look at the data. We've got to spike rates again. It's going to go way higher than it is right now. It says here, with inflation ebbing and the economy holding up, the Fed's last month maintained that the federal funds rate at a 22-year high, reinforcing views that its last hike in July marked the final chapter of the central bank's campaign to subdue price and wage gains, while Fed policymakers left open the possibility of further raising rates if inflation flares. They forecast 3 rate cuts this year. They said they were going to pencil them in, and they said it's data dependent. And even when the market took that as, oh, they're lowering rates, Jerome Powell and other Fed governors actually came out and said, I don't think you guys get this. And I've been telling people this all this time. So now let's dive into this next story. It's very important. Check this out with Goldman Sachs. So this is all Goldman Sachs. They're going to lower rates 5 times a year. We're going in for a soft landing. Check this story out. This one's out of Zero Hedge. It's entitled, Goldman was dumping billions in stocks and other assets as it told clients to buy. We're talking its own clients. It says after getting its 2023 forecast catastrophically wrong in November of 2022, when he predicted the S&P would close 2023 at only 4,000, or effectively unchanged for the year, Goldman's chief equity strategist, David Kostin, scrambled to overcompensate in his next annual preview, first writing in his 2024 equity outlook note published in mid-November that he now expected the S&P to close at 4,700. So you've got their chief strategist out there being completely wrong about 2023, but hey, no worries. Now listen to us. All right, we're going to get into what they were doing, what they were selling. Remember, Berkshire Hathaway, net seller of stocks. Jamie Dimon selling his stock. Jeff Bezos selling stock. They're getting prepared to rape the country during a time when it collapses, okay? That's what I want you doing. I'm not joking. I want you taking advantage of a bad situation, not being part of a bad situation. Type 1 if you understand that and you're getting ready rather than sitting there and just frivolously buying into a blow-off top. Now it says here, while it would be easy and correct to be cynical and observe that all COSTCO was doing was chasing both market price and the herd of other sell-side analysts, all of whom were suddenly out-bullying each other like a waddle of penguins on meth, it is irrelevant what prompted COSTCO to push the afterburners on his bullish take. Instead, what sparked our interest is what Goldman itself was doing during the time the bank was telling its clients to buy. So let's find this out. Because as we learned, going through the bank's latest quarterly investor presentation, we are confident that it will come as no surprise to regular readers, those that Goldman was aggressively liquidating billions in its principal investments through 2023. As the bank revealed in a chart on slide 16, revealing the details of its asset and wealth management division in a year when Goldman expected stocks to levitate modestly and eventually to soar higher. The bank was selling and selling and selling. Indeed, while the group which was once better known as Goldman's feared prop trading division, had on-balance sheet alternative investments of some $29.7 billion. As of December 31st, 2022, that number declined to anywhere between 2 and 4 billion every quarter for the next 4 quarters, with the bulk of sales taking place in the final quarter. Remember, I've been saying this for a while, that you're going to see all kinds of revelations about Q4 2023. It is really going to tell you what investors and companies were doing all of 2023. You're getting that full picture of the year now and that Q4. It says, to be sure, while there were some changes in market values, the bulk of the change was due to dispositions, meaning sales of some 12.9 billion of it. And yes, all this time, when Koshin was bullish on stocks, first tepidly, then euphorically. Remember, a lot of these investment managers in the big realm, the big investment banks, they're looking to get investors pumped up so that the investment bank can sell them their shares, causing a liquid market. Okay? I wish more people knew about this. This is probably the reason nobody talks about this on social media, and that's why I do, and I know that the channel's been getting hit. By the way, could you guys just do me a favor? Check your subscribe button, see if the D in subscribed was taken away, and it just says subscribe. If you don't mind hitting the subscribe button again, and maybe the bell icon, it would really help me out, because I'm trying to get this information out to the masses so that we can get prepared. I want the middle class to regain the wealth of the nation during this time. Now it says, how does this 16.3 billion in principal investments fit into the bigger picture of the bank's broader alternative investments portfolio? The answer, together with 21.3 billion in client co-investments and 8.6 billion in firm-wide initiatives or CRA investments, it was a substantial portion of the bank's total on-balance sheet, 46.2 billion in alternative investments, which has shown, which was comprised of loans, debt, securities, and equity securities, and CIE investments as other investments. Point being is, you could see on their balance sheet how they were telling everyone to buy, and they were taking their investments and selling them. Who do you believe? The only thing you can't believe is the quarterly reports and the annual reports that come out, so you get to see the history. Then you get to start to see who you should trust and who you shouldn't. Look, I got to grab, going to EMT refresher today. It's super pumped for all you firefighters out there. Let them know below how exciting that is. But I just want to bring you that little bit of information, because honestly, right now, what we're seeing with Goldman and all these other banks, they're selling and liquidating. Berkshire Hathaway. What are you doing? I'm not telling you to sell your equities. I have certain equities. My portfolio is still made in mining, because there's some companies that are doing really well, some that aren't. But my portfolio is up over 100% this year, or this last year. I'm taking profits right now, and I'm getting ready for that downturn where the whole world wants a rate reduction, but they're going to get a little bit of one, and it's going to be a fake out. And so I'm going to sit back. We've got all the videos made. You can be able to see, oh, who said what? who's going to be right, who's going to be wrong. Hope you guys got something out of this. Thank you to everybody that hit the resubscribe button, because there's some weird stuff going on. Real Estate Ninja is out.